What's up, traders? It's Robert Falco here from Real Life Trading. Dan Janson and me are bringing you another edition of the Real Life Earnings Report. Let's get into it. Dan, good afternoon. How are you?
Great, Robert Falco. Great to be back with you for yet another earnings report.
Yeah, we have some.
And this time, super pumped. We got two strong companies on the agenda today.
Yeah, some exciting ones today. CRM. I mean, you can see the chart here, just absolutely massive candle. A lot of news, fantastic earnings, and we have Dicks as well. So let's go ahead and jump into some of those financials. So here is CRM, and by the way, I love their actual deck. They got somebody out there that knows how to use PowerPoint and put together a nice PDF here for us. But
real life traders, we did start the kids program of Kids to Trade. So I think with their cartoon bears, cartoon dogs, I think they're reaching out to the kids as well. So hey, don't look us over. It is a user-friendly, great graphic, probably one of the better ones I've ever seen as far as just the layout, the graphics of what they did. So they spent some time on this one.
Yeah, and you'll see once we go over to Dick's, I mean, that one looks really boring relative to this one, even though both are really good. But CRM, for a lot of folks that don't know what Salesforce is, it's a customer relationship management tool and information company. And everyone expected pretty good results, but some of these highlights were just, let me zoom in here, absolutely incredible. So revenue of 5.15 billion. I think that's the first time they've ever broken 5 billion in a quarter, up 29% year over year. If you take a look at their guidance, they're also raising guidance, which is approximately 21 to 22% year over year growth. So that's something that in this market, a lot of companies aren't even providing guidance, or they're lowering guidance, but for them to be raising, pretty phenomenal.
Yeah, no, I agree. And they make sense. So they're a play. I mean, I think they were developing their ecosystem. They have an eerie, I mean, obviously the technology and product's different than Apple, but Apple has the Apple ecosystem that everybody's involved in. So when you have a business and you use Salesforce, you're using it for the customer relationship management tool. So helps keep track of where your customers are in the pipeline as far as selling, and being able to put notes in the next salesperson could kind of pick up. So they have that in place already. That was their main core product. And with Salesforce, they were able to, I mean, especially with companies that are saying, hey, let's all kind of work from home under everything. The product's already there, and they already have additional products that go with, as far as like the marketing, email blasting that they start doing. They pushed a lot of things into the different cloud storage areas. So they're making it very easy for any of these companies to just either add new products that already work with their current systems and stuff like that. So overall, just a strong, I mean, not that anybody would want to ask for coronavirus, but they were kind of built for this scenario. This is a drive for their business.
Yeah, this type of environment is definitely something that a company like CRM, Salesforce, is going to strive in. I mean, and the great thing, I know software as a service isn't new, but this just subscription model and continued revenue is just fantastic. I mean, you can see their Sales Cloud up 13% year over year, their Service Cloud up 20%, their actual sales platform up 66%, and their marketing up 21%. And the other cool thing is, it's not just the US or the Americas, because they also count South America here, but 28% there, 36% in Europe, and Asia Pacific. While again, it's a little bit of a smaller market, you know, they're up 23% there. So they're growing just across the globe. And like you said, I think, again, not that the coronavirus is a good thing, but it's something that this company was really built to be able to survive and thrive through.
I do agree with that. Yes.
And
as far as like the Yeah, I'm sorry. Go ahead.
This is another one that I thought was cool. This future revenue under contract. So this is, again, they have contracts for that subscription service. They have 30 billion under contract. So this is their light blue here is their current remaining performance obligation and non-current remaining performance obligation. But you can see this is just still growing, and this is kind of like how a lot of people look at Boeing's like plane orders. This is very similar. This is future revenue that's already under contract. So you can see pretty well balanced and just continues to grow.
Yeah, yeah, it makes sense. I can't imagine the turnover rate would be too high, especially it's probably once you sign a contract with Salesforce, and depending on the size of your company, the price for the products that you're using definitely varies. So larger companies obviously have larger contracts with them. Once you have the contract on the place, it's almost a pain and cost money to the company to switch over to a competitor. So once you're in, it's just easier to stay in and then just kind of start utilizing uh, and start when they start reaching out to start using, hey, let's use the marketing program, let's send out the email blast, let's you have all the information already stored in the system, so it's just easier to add on to it as opposed to saying this company's coming in with slightly better pricing. So something like that, turnover wise, and especially with the chaos going on, like I said, it's just it makes sense for companies to still want to survive, still they have to survive struggling, and this is an easy way for them to do it. So uh, they're not going to lose a lot of the customer base, and subscription model is an awesome way to run your business because you have the revenue coming in each quarter.
Yeah, they also have been a leader in ESG. I know for some that's like a buzzword, but the environmental, social governance, and something that early on they were one of the first companies that came out and said like, "Hey, we're going to have people work remotely." I think permanently. So, number one, that cuts down on just overall, footprint of the company, and then number two, it's just very I don't want to say like buzzwordish because I think they definitely mean it, but yeah, they're taking their employees or their team members into account when they're like, hey, we're not going to force everybody to come in and work. We're going to make sure that people can work from home. And it's just something that is very top of mind for a lot of investors. So ESG, they've been definitely a leader in out front very, very early. Mark Benioff was. So some pretty cool stuff with Salesforce.
Well, look how happy that bear is just rolling down that roller coaster
Yeah, they
with Albert
also
Einstein in the front.
They also are getting added to the Dow, which I know we could go on like a whole different tangent, or at least I could. I think the Dow is an irrelevant index, but it's trying to stay relevant, with the split from Apple coming in. Apple's going to drop to like 3% of the holdings of the Dow because it's a price weighted index. So CRM, based on the close today, we flip back over to the chart. Closing at 272. Let's see. UNH is going to be number one. HD is going to be number two. And Salesforce is going to be number three, top holding in the Dow. So it's going to make up probably about 6%, maybe a little bit more of the Dow Jones. So that's pretty impressive as well.
Yeah, huge responsibility, especially because everybody uses the Dow to see how good the economy is. But strong company. I mean, they're I could only imagine Salesforce never thought in their right mind that they'd be the third largest in the Dow. Or, I mean, I'm sure they would be striving for that, but that's huge for them.
Yeah, the other
And then you're
thing,
gonna get just because of that, you're gonna get new investors just picking stocks in the Dow.
yeah. Yeah, there's a lot of people that just don't know what Salesforce is. And now, if they do follow the Dow, because I know a lot of more old school investors, kind of look at the Dow versus some of us new school, look more at SPY and the Qs and things like that. But I think that's going to get them just some name recognition, some brand recognition, so to speak. And then look at all these upgrades. I know for those of you that don't use TrendSpider is a great tool, little plug for them. RLT does have a code. If you want to use it, you can get a discount. It's RLT25. But look at all these upgrades here. You have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 analysts upgrading today. I mean, of course, they need to, kind of just chasing price here. But what about all these others that, haven't upgraded? This is old guidance. So this is 13 and 26 weeks out here. You think a lot of these other analysts chase this price move and upgrade this pretty soon?
I don't think they have a choice. They don't want to be sitting there with uh, with them saying overweight to Salesforce when it's just cruising. That would just look bad for them. So it's kind of a type of pyramid where you have to be on the bus to ride it.
Yeah, I mean Rosenblatt. I don't know who this analyst is over at Rosenblatt, but in May he said sell. Let's see. May was all the way over here. He said sell, and yeah, or he or she. I don't know who the analyst that covers CRM over at Rosenblatt, but man, have they been wrong. And so I would think that Rosenblatt will probably have to update that coverage. I know Gene Munster over at Loop Capital just changed it to sell the other day out in front of some of this news. So it looks like that was a little bit of a steamroll. But Rosenblatt, the only other one that I can see on here with a sell. Everybody else is buy.
Somebody went to him. You fired. You fired.
Yeah. Yeah, they're gonna have to chase this, and I have to think that when they chase this with even more upgrades, probably by the end of the week, you're probably gonna see another 5-6 analysts upgrade this. I have to think that this could continue.
So let me ask you this: how do you play it tomorrow, 6 months out, and a year out? What's your thought process on it?
So if I was playing tomorrow more for a day trade, I would look for some type of pullback. If we do gap up, let's say, or just pull back into today's mid range, consolidation under the moving averages or the volume weighted average price, and then just look to take it bullish if it breaks, just on a continuation. Otherwise, a little bit longer term, you nibble on pullbacks. I don't know that this gap ever fills. I think some of it probably does eventually, but I don't know if this gap is ever going to completely fill with the increase in revenues that CRM's having. Their price to sales ratio is actually a bit more respectable, like as far as it's not stretched as thin. Like this thing could literally be a double if they were given the same type of price to sales ratio as like a Tesla. And as much as people say like, well, Tesla's not a car company, they're software. I mean, what gets more software than Salesforce? Like it's all, digital. It's all software.
The entire company is
Yeah.
software. That's
So
it.
why couldn't this have a higher price to sales ratio? And I think right now it's at like 10. Maybe after today it's a little bit higher, but if this gets upwards of 15 or 20, I mean, yeah, you could see this. I would upgrade it to 300 if I were an analyst. I would put a buy on it and I would stick a price target at like 300.
Yeah, I think that makes a ton of sense. Yeah, it's strong. I'm trying to think of ways in my head that this company starts losing business, starts getting cancellations on contract, and honestly, unless the only threat to them in like a SWOT analysis, the only threat I could see is some brand new product coming out that just kills it. But with the amount of money that they have on hand, it's probably easy for them to just develop and push it into their own type of product. So I think they're a strong company. They have the market cap covered. I mean, they're the leader in the industry. So I don't see too much that could possibly hurt them. Everybody else is trying to play catch up.
Yeah, for sympathy trade, I think one of their competitors is HubSpot, which eventually is definitely a buyout target in my opinion for maybe like a Microsoft or an Oracle or something like that. But this probably gets some sympathy move. So I think that HubSpot could be a sympathy play if you feel like you're like chasing Salesforce. I think HubSpot could be a sympathy play there. So let's jump over to DKS here. You can see a giant hammer candle on the day with massive volume. I mean, 18 million shares today. Huge hammer candle. Normally this thing is trading what, like 2, 3, 1.5, million shares. So massive move on.
Everybody was trading it today.
Yeah, massive move on Dick.
Not me. I didn't trade it, but everybody else. Yeah, no, it's so the one thing I did notice with Dick's is they do have a large short float. So there's a lot of people that are getting trapped pretty hard on this company. So I could see it continuing to move in a positive direction, just me, without even any fundamentals being going forward, but just because it's going to continue to start squeezing some more people out. And we've seen that on Tesla before. We've seen it on numerous companies where just when you're just overly negative and then you get some kind of just bang up move like today, people are just going to start getting like they have to start covering.
Yeah, what was the short float? Was it 20
It
something
was
plus?
almost 25%. I think it was like just under 25% short float on it.
Yeah, that's definitely pretty
24,
large.
25, something like that.
Yeah, if I was short this, I would want out as well. With this type of
Yep.
volume and this hammer candle, with this gap, I mean above all of this stuff, I mean everyone who shorted here, I mean all the way back to geez, when is this? June, May of 2017. Anyone short in here is getting squeezed. So speaking of
Okay.
earnings reports, so I know this one isn't as the numbers in here are good, but definitely not as pretty. I mean, it looks fairly boring here on DKS. I think that they should hire someone to put out a better PowerPoint.
Well, they got the logo in there. I mean,
They do have the logo. At least they have that. Thankfully.
yeah, this is like a high school report they put out.
But e-commerce, I know we talked about that in Target a little bit. I mean, e-commerce up 194% in Q2. Curbside contactless pickup. So, I think everybody was doing that. So that was pretty smart. And I really didn't see this coming. I didn't think they would do very well. But then I know you mentioned that you have a friend that was talking about some like outdoor and camping gear and things like that were just going off the shelves, hard to find.
Yeah, I mean, he from what he told me, like camping is pretty much at all time highs. Like people need something to do. They need to go somewhere. It's hard for people to travel, so it makes sense that people are going in buying camping gear, buying tents, buying things like that. Which Dix covers all that. As far as like recreational sports for schools and stuff like that, I can imagine that division probably took some kind of hit because there's no football, there's no soccer, there's no basketball. Not that you need too much gear for basketball, but just the ball and some shoes. But all of those are probably down or struggling a little bit. Um, but as far as like the camping, I'm sure fishing has probably been on an increase too. Just gives something to do for some people, and even if they've never done it before, they need new gear just to try it. They're out there social distancing, they're not by anybody, so stuff like that, which is all products that Dick's would carry. I would imagine is definitely on the rise.
Yeah, and the other thing that I thought about too, which I didn't really think of initially, but just like weightlifting equipment and workout equipment, I know has been hard
That's
to
true.
come by. And like gyms, I mean, they're still not open in certain areas in certain states. So if you want to have a home gym or anything, I guess like barbells and dumbbells and weights have been really, really hard to find. I've had some friends that have talked about, well, I picked up like 125-pound weight on Craigslist, and then I had to go over to like Facebook Marketplace to get some other ones just because they're sold out everywhere. And then reading through some of their report, during this pandemic, the importance of health and fitness has accelerated, and participation in socially distant outdoor activities has increased. So even though people were stuck in their house, when they do get outside, they can't go to the movies, can't go to the gym. So I guess they're going old school and they're playing ball, or like you said, they're going camping or they're working out at home. Yeah, outside of just owning a Peloton, I know that's one company that had really captured um, some of this workout at home movement, but it looks like Dick's has as well.
Yeah, I mean Peloton is very product specific, but with Dick's they do have all the home gyms or future coat racks for many people, I'm sure. And then they have yoga mats and all the stretch bands and stuff like that too. So yeah, I can imagine the curious thing to me would actually be going forward with the gyms. Now that everybody has a lot of equipment at home, is gyms going to be as popular? That would be probably something for a future video whenever we could cover some kind of gym or something like that. But it'd be interesting to see if people start going back to some of the old way of life, or if this is just a nice boost to the sales and for Dick's, and what happens from that point.
Yeah, I also
So going
wonder.
going forward, I mean, business wise for Dick's, it sounds like a lot of they could get another if schools reopen and a lot of the extracurricular activity starts pushing through. I'm guessing that people are going to start needing some of the schools, like the sporting stuff and the normal stuff that they would sell. But I wouldn't be surprised if this is a almost a one time hit for the company and kind of plateaus at some point.
Yeah, that's where I was going. Is I wonder how much of this is going to stick around, because some of that stuff, like you said, like home workout equipment, even if they don't necessarily go back to the gym, like we know how it is with everybody who starts working out. It's like you do it for a couple months, and then unfortunately, it's just the reality. A lot of people fall off and don't get back on, and all that equipment is just a like what you throw your laundry on there. Instead of folding it or something, or you throw your dirty clothes on top of it instead of in the hamper. But yeah, it could be a one-time thing, even though technically, like, this is a really good move today. It's a really good move technically. There is a short float, so I do think we could have some short-term continued bullishness in Dick's, but longer term, I don't know if it's something that's going to stick, because how often do you go back to repurchase some of that stuff? And I don't know.
Right. Yeah, the technicals are very different than the actual business. Once you own the running machine, the elliptical, you're not going to buy another elliptical. It doesn't make sense. So a lot of the one time, and considering the gyms are closed, I know with social media, everybody's posting their workout videos, things like that. So I could only imagine that that was probably a huge boost from it. Like I said, camping. But again, unless you're a diehard camper that have to go back and your tent got blown down or eaten by a bear, you're probably not for another couple of years going out to buy another tent or fishing pole or something like that. So I think we've seen a nice move in Dick's. I could probably see it short term, technically speaking, just because we have very high short float in it, that it could potentially continue to gain a little bit of steam before we get some kind of fill. But like you said on CRM, that gap might not fill. This one I think probably will eventually fill.
Yeah, and you can see just the analyst sentiment too. I mean, a lot of people withhold. Do they upgrade on this? Maybe, but it's definitely not as favored as something like CRM. So yeah, I think that's it for this. What, fourth? Is it the fourth or the third edition of the earnings report?
I think we're up to number 4.
Yeah, I think we are on number 4. So thanks for joining us. Don't forget to hit that like button down below. Hit the subscribe button on the Real Life Trading YouTube, and then you can come check us out at reallifetrading.com. So thanks again. Once again, my name is Robert Falco, here with
Dan Janson, you guys have been great. And if you guys are interested in learning how to day trade, learning how to analyze the chart, make sure you check out all the education on real life trading. What is the current price for the education, Robert Falco?
I think it's free last time I looked.
It's free. It's 100% off always. So check it out. There's no reason not to. And it's a good way to either have additional income, or like me and Robert Falco, just make it your main source of living, breathing, and surviving. And with trading, you could literally go anywhere in the world, and as long as you have internet connection, it's a great skill to learn. So check out any of the free education that is posted on real life trading as well.
All right, and we'll catch you next time on the next earnings report.